welcome back to Midcap Masala right here on ET Now. And onto the show, let me welcome Physicswala management, because just after the listing, the company first time reported its numbers on the exchanges. And I must say, it's been a good set rather by the company, because from a loss number in the bottom line just last quarter, the company has now turned profitable on a YoY as well as on a sequential basis. They have seen an improvement across the parameters, and even the calculated EBITDA margin improving to almost 22% in this particular quarter. But what went right and what's the outlook going ahead? Let's understand more on that. And let me welcome Mr. Prateek Maheshwari, co-founder and whole-time director of Physicswala, joining us. Hi Prateek, morning. Firstly, congratulations on a good set of numbers. See, so many developments by the company in just the quarter gone by. You have done an acquisition, you have plans to expand. So firstly, let's start with your outlook on the numbers then. Because this time, like we were just flagging off, numbers were pretty good. But what about the second half of this fiscal? How are you expecting quarter 3 and quarter 4 to pan out for you?
Yeah. So overall, first half looks very solid for us in terms of enrollment growth, in terms of revenue growth. The overall revenue is up by 29% in first half, and just quarter 2 PAT is up by 70%. So a good satisfactory result in first half. Generally, the nature of business is very cyclic. So quarter 3 is our best quarter. Quarter 3 is the best quarter of the year, is the strongest quarter of the year. Quarter 3 you will continue to see PAT profitability. You will see upwards of 20% of EBITDA of that quarter, which is like 15% this year. For second quarter, this 15% number will go to 20% for quarter 3. So overall, the entire year picture, there will be a solid growth in top line and significant growth in bottom line.
Okay, and this also brings me to the next question, Mr. Maheshwari. Then, first of all, morning, Ashesha this side. You're also looking to become full year PAT positive in FY27. How confident are you, and will you just break even, or will the profit quantum be substantial enough?
That will be a substantial profit for FY27. That is what we are planning for the next year. And our nature of the business is the next year planning starts well in advance, because the first and the second quarter of any year where the maximum admissions happens, the quarter 3 is the most profitable quarter for cycling business like us. So next year we will have a substantial profits in terms of overall year. Next year will be a unique year where the entire offline business will also turn EBITDA positive. So this is also another plan which we are charting out at this point of time. Overall EBITDA level profitability in our offline segment as well.
All right, but Prateek, let's talk about your online and offline business performances, and especially with respect to the average revenue per user. Like I can see that your offline average revenue per user is actually lower due to the shift mix, while there has been an 8% YoY growth in your online collection per user. If you can give us some sense, how are these numbers headed going ahead, and what sort of a mix can we expect? Where is the company's focus right now?
So if you see, so it's not right to look at the ARPU at a mid-year level. The true picture comes at the end of the year. ARPU of offline is 4% down because we have introduced a lot of short-term courses in our offline learning segment. But if you see, overall offline enrollments are up by 30%. Overall revenue improvement in offline is up by 22%. So it is on a very, very healthy track, offline business. Overall, you have rightly mentioned that the online ARPUs have improved by 8%, which is a positive trend, and this trend we will continue to have in upcoming years. That is a cost of living adjustments. We don't want to increase our online ACPU drastically, because we stand for access. We stand for highest quality education should be accessible to each and every student of India. So this is the mission, this is the vision of the company, and we want to live it. The easiest way to double the EBITDA and triple the PAT would be just to double our online batches prices. but we don't want to do that. We want that, the tier 3, tier 4 city kids should have the highest quality education access.
And Mr. Maheshwari, how are you trying to integrate AI into your operations, and what impact will this have on attrition then, which has already been a concern for you?
So AI is the center of our future strategies. We have been investing in AI technology since FY23. We have 100+ team members who are just working on implementing AI in education. AI Guru, AI Grader, AI Sahayak are a couple of AI products which are already in place. More than uh, 10 crore doubts AI have already solved. This year, more than 7 lakh copies, the handwritten student answers copies have AI is checking. That is allowing us to give leverage at a support teacher level. At the same time, we are training our AI models on our proprietary data. We teach maximum number of kids, that generates maximum number of data, and that allows us to fine tune our AI initiatives. So we are backing a lot, and we have seen a lot of user level engagement improvement with the help of AI initiatives. So we will continue to invest more in this direction, and this is empowering a lot of students.
Interesting and fascinating to know that how are you integrating the AI. But Mr. Maheshwari, if you can give us some sense that how it is helping you to reduce the cost. I know it's very early stages that I'm asking and putting up this question, but overall, how do you see AI helping you improve your cost structure?
So, so as I told you, the 10 crore doubts is being solved by AI. So cost of solving a doubt by AI is 5 to 7% of the cost of a solving of a doubt by a human. And with the 88% accuracy moving forward, 80% doubts will be solved by AI. That will allow us to deploy this manpower into this teacher workforce into our offline operations. So we will get for our future growth, we need not to hire additional subject matter experts, doubt teachers, content experts. Now AI is making test papers better than a human. Now AI is evaluating answer sheets of the students almost equivalent to a human. So because of these trends, I can reshift my existing subject matter expert workforce into our offline learning centers, and that will give me a lot of leverage in future.
So Maheshwari, one last question before we let you go. You've reported about 1900 crore of revenue in the first half of FY26. What will your guidance be for the second half of the year? And now that you're telling us that FY27 will be full year PAT positive, what will the bottom line guidance be? I understand you did tell us that it will be substantial, but if you can quantify that for us.
So the revenue guidance, it is in the same lines of H1, and bottom line also, quarter three, as I mentioned, that would be the strongest quarter, and for overall, you will see the IGAP EBITDA from the last year to this year will be almost more than 4 times.
All right, with this, Mr. Maheshwari, we let you go, but so good having you on the channel today. Thank you so much for your time and all the very best for the upcoming earnings. All right, but with this, viewers, we are completely timed out in this edition of Midcap Masala. It's a goodbye from me and Ashesha and the entire team. Thank you so much for tuning in, but don't go anywhere. Bye, Nasil. Now we'll take the action.